After a sickening and historic slide, gold has rebounded sharply in the past week, pushing to $14.75 an ounce. I'm joined now by Michael Pento, president of Pento Portfolio Strategies and author of The Coming Bond Market Collapse. Michael, you've been bullish on gold for a long time. What do you make of this rebound we've seen in the past week? It seems like there's a lot of demand for physical gold, especially out of India and China. And do you think that gold put in a floor in that big decline?
I think it did. Listen, I'm doing fundamental analysis on the gold price, and I don't see any material change for the reasons why I've owned gold in a huge portion of my portfolio since 2001. And those reasons they're static. One reason we have is the deficit as a percentage of GDP continues to be higher than nominal GDP growth.
Right.
So that means our overall debt to GDP, our deficits are going to keep growing. So you have to own gold for that reason. Look, we've had 4 years in a row of trillion-dollar deficits. This deficit alone, everybody's talking about, oh, the deficit's come down. It's still going to be $850 billion. Real interest rates are still negative. I don't see that changing anytime soon.
And of course, the Fed, they're pumping the print press over time.
$85 billion per month. QE was supposed to end years ago, and every time they're supposed to end QE, guess what? Another iteration comes, which was bigger than the one prior.
Right. Well,
now, let me just add this too. What piece of economic data can you point to of late that would make Bernanke say now's the time to slam on the QE brakes?
Oh, not at all. And I've been on the record of saying I think their next move is another round of QE as opposed to scaling back, despite all the chatter about they're going to scale back. Obviously, we'll see what they say next week. You know, at their
well, when you say
meeting.
that, do you mean another round? This is perpetual right now. Do you mean an increase of the $85 billion per month?
Yes, more easing of some kind, more combination of some kind. Whether it's another round of, whether they make it $100 billion a month, or do some other kind of facility that we haven't heard of.
So here's the problem. So the balance sheet was $800 billion. The balance sheet of the Federal Reserve was $800 billion in 2007 when the Great Recession began. Now it will be $4 trillion by the end of this year. And who can tell me a situation in history where a balance sheet of that size was ever unwound successfully?
Right.
It has never happened.
Right. So that brings us back to gold. Right. I don't know. that brings us back to gold. One thing that has changed though is the dollar has strengthened relative to other currencies. The gold is of course priced in dollars. So you know, the fact that the euro, you know, we might be the best horse in the glue factory, but we're still the best horse.
The smartest amoeba in the petri dish. I don't know what that gets you. So let's just do a thought experiment. Let's just say there was one global currency, and we increased, and it was only dollars, and we increased the amount of dollars outstanding overnight by twofold. The dollar would not be changing against any. There's no other currency to measure it by. But you have to measure the dollar against gold. The intrinsic value of the dollar is falling, even though the dollar is rising against, say, the Abe and Kuroda regime, which are
the yen is tumbling. They're doing it. That's what they want.
That doesn't make you feel any better. Should make you feel any more comfortable. Okay, so if you go and visit Japan, maybe you're not going to have a huge inflation shock, but the intrinsic value of the dollar is eroding.
Right, and the other thing that the gold bears would point to is say China's economy seems to be slowing down. There's big demand for gold there, and basically the whole commodity space has been weak the last couple of months. So the global economy is slowing. There's less demand for commodities.
Well,
and this gets the speculators out of gold.
The GLD, speculation in GLD, but the physical demand is there. I wouldn't lump all commodities together in one basket.
No, it's an oversimplification.
Iron ore is different than gold.
Yeah.
Gold is real and honest money. It's an alternative to a currency that's being destroyed by a central bank. So if I was a resident of Japan or the United States, do I want to hold dollars or do I want to hold gold? I want to own gold.
Okay, fair enough. So would you be buying more here? Have you been buying more?
I think the biggest play right now is in the miners. The miners presaged this move for about a year and a half. They're down 50%. And they said that gold at $1,900 was coming down to around $1,300 an ounce. It did. And now the miners are starting to outperform the metal. And that's your key. I think the miners are a big play right here, and they presage a floor in the gold price, and perhaps a new high very shortly.
Okay, any particular names you like in the miners?
I haven't run by my compliance department, but I do like Arico Gold is one we own in the fund, and also New Gold.
Okay, fair enough. We got to leave it there, Michael. Thanks very much.